Hi, you're watching Wall Street Confidential, and I'm Deborah Borcha, and I'm talking with Jim Cramer, and we're looking at oils this morning.
Right.
They look to me like they're setting a bottom. The lows are getting
I think that's
higher.
true. Now, but I do want to point out, when oil was at 90, 80, I was recommending the stocks, 80, 90, 100. Because I said, holy cow, the futures are reflecting 60. It won't get to 60. Well,
right.
You know, oil got to below 60 and the stocks got hit. But there was, I'm watching all rallies key on Exxon. Exxon, I feel, put in a bottom when well ahead. Exxon predicted this exact decline. And you know, so Exxon has been a fabulous tell about where oil's going. I mean, it is just perfect. So I am not going to now say that Exxon's wrong because it's going up. I mean, Exxon's probably the strongest short-term stock in the Dow, and you see it every day. Right. All the rallies key on Exxon, even when the oil futures are down. But that's because I think Exxon is easy to key on. It's easy to move up because I think that the group is putting in a floor. Now, one of the things that was really important to me, and it was my view on this was influenced heavily by Jim Hackett last night, who's the Anadarko CEO, whom I really, really like. He's a very smart guy. And I was, asking him why the buyback here, and he goes, well, because I'm being priced at $10. Okay, each barrel you're buying it at $10 a barrel. He says, and even if you're really bearish, $10 a barrel is too low. And then the corollary is true too, which is that the whole group is reflecting dramatically lower prices now, except for Exxon, which is doing its role as the leader, turning up. So I think that we're in a tradable situation here with oil. By the way, I want to call everyone's attention to an article in Time magazine about what happened to oil at 140s and how it was a short squeeze with this SEM group. But I genuinely believe that oil can be bought. And I've been an aggressive buyer of BP here because BP's got a great yield and it's down huge and had a great quarter and the dividend's safe. But Hackett emboldens me. By the way, Hackett was completely hedged on natural gas. 100% called that natural gas was too high when it was at 13 and hedged his whole 2008 and 2009 production.
Now,
hedged it all.
Normally you don't like when companies buy back stock, right?
Right.
So,
it's just that I mean, and I don't because we're in a vicious market where people can push stocks down. Now, Hackett reminded me, he said, look, remember, in the end, these are real companies. It's not like a company where we're saying my stock seems cheap. He said, we can put a valuation on our known reserves. Okay. We can divide them by the number of shares, and we come up with a $10 valuation. And there's, that's on future, so it's not the dividend necessarily would correctly reflect the future as much as buying back stock. It was one of the rare times when I heard someone justify it correctly, even though I know the stock got killed because it only had a 1% yield.
Okay, so could we rank Exxon, BP, Anadarko?
Well, I mean, I like yields, so I have to rank them BP first.
Okay.
Someone who believes that natural gas is going to rally should buy Anadarko.
Okay.
Someone who believes that oil is going to rally should buy Exxon.
Thank you for that breakdown. Yep. It makes it easy for our investors to put themselves into their box and figure out which one is their choice.
Very good.
Thank you. Stay tuned for more at thestreet.com TV.